Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, October 24th, 2011. S&P 500, the video's up on the blog. This is also my website address if you want to go check it out and get on the list for the daily email. So S&P 500 broke out of its range. Okay, some dum-dum was saying that it would probably hold for option expiration. That dum-dum was me, by the way. Just a little bit. No, not really that bad of a word. Anyway, so we gapped up and then we took a dip, but wound up rallying into the close. Closed a little bit off the highs, but more on that in the S&P video. So now that we're above this range, does that mean we're all just free and clear to just zip right on up to the highs? Well, absolutely not. We still have resistance right here, which is 127% external retracement, and we have the 200-day moving average, which is right above it. Now we're entering a bullish seasonal period, which is the start of November. We have 6 trading days left in October. This would be a great time to get a dip, try to shake some of the nervous bulls out and get the anxious bears in. Be a nice time to get a dip, and then if the seasonality kicks in, be a nice opportunity for some long side trades. Okay, now since we broke, all right, I got off my bearish stance with the follow-through day. All right, I've been making that clear. I hope I've been making it clear that this correction, in my eyes, because I go by the IBD follow-through days rules, is over now. So this breakout, okay, if it sticks here, could very well lead us right up higher into this resistance zone and beyond. But just think we're still so extended here, and a nice dip would do so much good. It would shake out the anxious bulls. All right, it's not going to get me bearish again. All right, unless we take out these lows, of course. But it would just do so much good for the market here. It would shake out the aggressive bulls. It would, like I said, get some aggressive bears back in, which would, of course, fuel a fire on short covering if we did bounce. And I'm looking at this as, I have to start looking at dips as buyable opportunities, all right? Because if the correction is over and we're back into a confirmed rally, well, that's what I have to look for in order to trade with the trend. All right, so what's the setup here on the short term? We'll see if we get some follow through here, or we'll see if they try to trap the anxious breakout buyers, especially into option expiration. All right, I would not be surprised if we got a little shake and bake here into the end of October. All right, NASDAQ 100. Okay, lagging now thanks to Apple, but we did come out of this little flag, or I guess could you call this an impulse? Well, whatever it was, it came out of this little pattern. So now if we go from here, still looking to test the highs, but if not and we fail from here, okay, that could bring some acceleration down to the downside and pull us back towards the 50-day moving average here. All right, I'm going to clean up this Fibonacci grid here, and you can see this is really the only number that's going to matter, this 78.6. Right now we're below it. All right, Russell. The Russell's been lagging, and you can see it's forming a consolidation under the 89. And by lagging, it doesn't necessarily mean the percentage move. It means relative to the recent highs and lows. And you can see the high of this correction since the, for lack of a better word, meltdown. All right, that comes in at 737.64. We're still below it here. All right, something to pay attention to there. See if the Russell catches up. Small caps like to outperform towards the end of the year. I mean, they like to, doesn't mean they always do. The Dow looks like it's headed for the 200-day. Semiconductors up 2.25%, but not a super day as it saw some rejection late in the day. So you really want to see tech try to step it up here. Banks trying to break out of this coil. Didn't have a great day relative to the S&P, but definitely didn't have a bad day. All right, let's see if that can get going. It's also lagging its correction high, which is up here. All right, let's see the brokers. Okay, brokers trying to break this little consolidation. Watch the 89. Here's Goldman. Okay, still under that 50-day. I can mark this off right here. I mean, could get a little squeeze on Goldman if the buying comes in. All right, if we're dipping, no, I'm not going to be looking for a squeeze. All right, but you can see this nice little tight pattern here right under the 50-day. So, the problem with Goldman is it's been prone to fake outs lately. So if you see something, oh, looks like we're rallying, and then it gives it up, just gotta be careful on that one. But it was a nice little coil. I mean, the 50-day is definitely serious resistance. So another possibility is that we squeeze out to the downside. But since it's coiled like this is a mini coil. I'm going to be watching for a move one way or the other here. All right, Morgan, 89 EMA, watch that. Let's look at some banks. We skipped over them. Bank of America under the 50-day coiled. JP Morgan. All right, over the 50-day, still coiled. Citigroup, trying for that 89. Bank of New York. All right. Look at GLD. Kind of messy here. SLV, the same thing. Cyclicals. And nice move on the cyclicals. Watch that 89, still below its corrective high. XLB. Way below its corrective high up here. But this one took it really hard on this push down here. All right, OIL. USO, same deal, same pattern. OIH. Broke out of this little coil above the 50-day, but couldn't close above it. Something to pay attention to here in case there's a little fake out, make out kind of move. All right. Let's look at some stocks. Potash. All right. Had the nice bounce off the lows and then a pullback. The doji on Friday. Can this get above 50? If it does, make it a quick move up here. Mosaic, whatever you want to call it. Watch the 50-day. Monsanto. All right. You can see it's a messy range, but I mean, if this one gets a little bit of a bid under it, you can see the retest of the highs here. Just keep your eyes on that one. Apple. Watch the 50-day moving average on Apple. Okay, we're pulling back now. We have the gap. We have the 50-day. See if that comes in as support. It's been down 3 days in a row. All right, just keep your eye on it. Don't roll out the gurney yet for it. All right, just see what it does around that 50-day. Amazon. Holding the 20-day, 3 tests. Notice how it pinned 235 beautifully. See if it can get a little release after option expiration. Price line. Okay, nice day on Friday, 21 points. See if it can get above this last reaction high up here. Netflix. All right. 20 EMA. Watch that as potential resistance if it tests. Seattle Genetics. Okay. This one came up on my screen as a coil. Okay, you can draw in some lines here. See if this gets expansion move. That's SGEN. NLC. Still rising here. This was a nice one on this channel break. I mean, yeah, it's not a barn burner, but what's it, up 5% since the break? Let's see, where did it break out? It broke out 36 basically, right? Yeah. Above 35.96 or 30, so call it 36. I mean, you know, $1.70 on 36. It's almost 5%. That's not a bad move. There's barely any retracement here. Went down to 36.15 on this day. That was it. So slow and steady, slow and steady. How about MasterCard? That's an interesting one. A little bit of a flaggy kind of pattern. Somebody wrote in, asked me if this was a bull flag. I don't see it as a bull flag because there's no impulse, but it is over the moving averages. You can draw some lines over it and use them as reference. So let's see what happens. All right, let's see what happens the first couple of days this week. Do they just keep ramping us, or could the option expiration day breakout be an aberration and they bring us right back down? All right, have a great trading day on Monday. Talk to everybody again on Tuesday.